Okay, dear students, we are going to start with the second chapter, that is final accounts with the partnership firm. As it is in the unit test, I need to start this chapter and I'll complete this chapter. Don't worry, I'm going to complete this chapter first and then I'll be completing chapter number 5, and then again all the chapters will be completed. Final accounts, we are going to have it. Basically the objectives we are going to see, that is only the theory part we need to see it. Otherwise only in the final accounts we are going to deal with the trading account, the profit and loss, and the balance sheet, and the partner's capital account, what the partner needs to have, and the P&L appropriation account you have to prepare for it. For that the objectives: to know the ascertain the profit and loss, to ascertain the net gross profit and loss, ascertain the net profit, ascertain the divisible profit, that meant how much divisible profit means how much a partner is entitled to get it, right, from among the partners, how much he is going to get, that is coming under the divisible profit. To know the financial status of the firm for the taxation purpose. So these are the objectives. Basically not wasting that much of time, we are going to just see the trading account. Now in the trading account, transactions pertaining to receipts and issue of the goods, purchase of goods, and production related expenses are recorded in the trading account. You are going to underline this: transaction related to the receipts of goods and purchase of goods are related in the trading account. Now we are going to see it over here that when trading account is closed, if the total of the credit side of the trading account is more than the debit side, the difference is shown as the debit side, which is considered as the gross profit. That I will explain to you in this statement only. No need to worry, we'll not waste time in this explaining over this. So I'm just going to explain it here, then I'll show how it will be how gross loss occurs or the gross profit occurs, right? The first, that is, in the trading account you are supposed to write the opening stock first. That means you are going to write on the debit side opening stock, the amount outside. To purchase whatever the purchases you have done during the year, you are going to write it. From that you are going to deduct purchase return, that from the inside column you are not going to write it outside, you are going to deduct it from the purchase, the amount, so it is written inside over here. Less outward of goods, whatever the goods have been gone outward, that you are also you are going to write it, that is goods gone by donation or by charity or any other purposes, or goods destroyed by fire, any of the purposes, goods that will be covered under the goods of outward, so that will be deducted minus. After deduction this both, the final amount will be outside. That means after deducted from the purchases, this both purchases amount is this, right? And so after deduction of this both, you will be deducting the amount, final amount you are going to write it outside. Then to purchase expenses, you are going to write it on the debit side. This you have to learn, my dear students. You need to know that what all expenses you are going to write it on the each and every time. All the expenses won't come, but sometimes it will come, that carriage inward and railway freight and demurrage and port charges. You need to know that on which side which this entry is coming, right? Then carriage inward on the debit side, railway freight, that is an expense on the debit side, octroi, import duty, transportation, cartage, port charge, demurrage, wharfage, production expenses, production wages, royalty means amount being paid, yes, whatever the amount of royalty of being paid to the basically of the business, that is known as royalty. Then factory expenses, that is including the rent, taxes, electricity, fuel, gas, coal. Then the consumable stores, that is oil, grease. To factory depreciation. Now the depreciation of the factory, that you are going to write, because this is all included. The depreciation of a machine of a factory, if it will be, then it will come on the trading account debit side. I am repeating again, my dear students, if the depreciation is of the factory, that means machine, it will be given to you in the question that it is for the factory. Then if it is for the factory, definitely that expense of depreciation will come on the trading account debit side. See here, it will be given to the plant and machinery depreciation. to factory depreciation. Yes, factory depreciation means plant and machinery will be given to you, but plant and machinery's depreciation, that is of factory only. So that factory depreciation, plant and machinery depreciation, both you are going to write it on the debit side of the trading account, right? Now coming to the, first of all, coming on the credit side, by sales account you are going to write like this format only. You are going to write it over there in the when you prepare the final accounts, because this format won't be there. Yes, you cannot change in this format, especially the opening stock, purchase, less and less outward, sales and sales return. Others you can write it up and down, you can that is not a problem, but you cannot write opening stock down and purchase upside, right? This format will be totally be fixed only. This much format will be totally fixed. That means to opening stock, that will be fixed, and this less minus sales return, that will be also fixed. So that you have to write on that side only, the very first, and then only you are going to start with the another entries. So by sale of scrap, by closing stock, and by profit and loss account, right? Now by profit and loss account there is a gross loss. Now how does the gross loss occurs? Gross loss means, now first of all we'll talk about the gross profit. When the gross profit, if the total of this side, the total of the credit side is more than the total of the debit side, yes, if the total of the credit side is more, that means credit side no total debit side karta vadare hoy, right? Then difference will come on the debit side, and that difference is going to be called as in gross profit. That difference will be called as in gross profit. Now the same vice versa, if the total of the debit side, this side total, is more than the total of the credit side, right? Debit side no total વધારે હોય credit side કરતા નો, then gross loss will occur, because the total of the debit side will be more. So that total, the same total will come over here, and from this total you are going to deduct this amount, you are going to deduct this amount, so you will get the gross loss. Whenever the total of this side, credit side, is more, the same total you are going to write it also on the debit side, and then from this total you are going to deduct this each and every entries, and you will get the gross profit. Have you understood? So this is the trading account of how you will get the gross profit and the gross loss.